Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'll be guiding you through the latest news and trends that are shaping the market. We've got a lot to cover today, but first, let's take a look at what's been happening in the currency markets. The US dollar has been on the rise thanks to strong employment gains in May. According to the Labor Department's Bureau of Labor Statistics, non-farm payrolls increased by 172,000 jobs last month, exceeding economists' forecasts of 85,000 jobs. This news sent the dollar up sharply against the yen, which has been testing the 160 per dollar barrier. The yen was last down 0.08% against the dollar at 160.150. And it's headed for a fourth straight weekly loss against the dollar. The 160 per dollar mark has previously triggered intervention from Japanese officials who have warned about excessive volatility. The Bank of Japan is widely expected to raise interest rates this month, which could add to the yen's woes. Meanwhile, the euro fell after the release of the US jobs data, and it was last down 0.75% at $1.15 too. Despite expectations of up to 3 European central bank rate hikes this year, the euro is struggling to gain traction against the dollar. The pound also fell 0.64% to $1.33. The strong U.S. employment data has also had an impact on the stock market, with many investors expecting the Federal Reserve to leave interest rates unchanged when it meets this month. However, some analysts believe that there's still a good chance of a hike before the end of the year. In other news, peace talks between the U.S. and Iran are at a stalemate, and a reignition of hostilities has kept oil prices above $90 a barrel. This has raised concerns about global growth and has supported safe haven demand for the dollar. We'll also be taking a look at the latest developments in the cryptocurrency market, where Bitcoin is set for a 19% weekly drop after hitting its lowest level since February. It's been a wild ride in the world of finance this week, and we're just getting started. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into a complex web of financial news from around the world. A potential investor class action is being investigated against TerraVest Industries Inc. by Caloglian Myers, LLP, following allegations that Executive Chairman Charles Pellerin may have tipped off family members and acquaintances ahead of a major acquisition announcement. This revelation led to a significant drop in TerraVest shares, with a 31.6% fall on June 5, 2026. The allegations suggest that Pellerin communicated privileged information about the acquisition before it was made public, which, if true, could have significant implications for the company and its stakeholders. The Quebec financial regulator has obtained a search warrant, indicating a serious investigation into these claims. It's essential to note that these are just allegations at this stage, and it's crucial to wait for the outcome of the investigation before drawing any conclusions. However, if found to be true, such actions could undermine trust in the company's leadership and potentially lead to legal repercussions. In other news, we're also seeing developments in inflation rates across various countries. Chile's May inflation data is expected to show an increase, pushing above the 4% top of the central bank's target range. Similarly, Mexico's inflation readings are due, with expectations that the full-month print will slow down but still remain near the target range ceiling. Argentina, on the other hand, is facing its own set of challenges, with data suggesting that inflation accelerated more than 2% for a ninth month, pushing the year-on-year print up from April's 32.4% reading. Peru's central bank is meeting to discuss potential rate hikes amidst slight cooling in May's annual inflation readings. Lastly, Brazil's benchmark IPCA inflation index is likely to push over the 4.5% top of the central bank's target range due to rising food and electricity costs. These developments highlight the ongoing struggle with inflation that many countries are facing, impacting economic stability and policy decisions. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to bring to your attention a developing story that's making waves in the world of technology and infrastructure. It appears that lawmakers in New York have passed a bill proposing a one-year moratorium on new data center construction, marking the first statewide ban of its kind. This move is seen as a response to growing concerns over the environmental impact, energy prices, and local job creation associated with these massive facilities. Now, I know some of our listeners might be thinking, what's the big deal about data centers? Well, let me tell you, these structures are the backbone of our digital economy, providing the necessary infrastructure for artificial intelligence, cloud computing, and other critical services. However, they also consume enormous amounts of energy and water, which has raised concerns among local communities and environmental groups. The proposed ban in New York is not a blanket rejection of data centers, but rather an attempt to hit the pause button and assess the situation. Lawmakers want to give themselves time to study the effects of new data center construction on the environment, energy prices, and local jobs. It's a nuanced approach that acknowledges the importance of these facilities while also recognizing the need for responsible development. Of course, not everyone is happy about this proposal. Representatives from companies involved in data center construction argue that a blanket moratorium would be damaging to the state's economy, and that a case-by-case assessment would be more effective. They point out that some data center projects could bring significant economic benefits to the region, including job creation and investment. As we consider this development, it's essential to remember that the world of technology is constantly evolving. The rise of artificial intelligence, in particular, has created new demands for data storage and processing power. Data centers are a crucial part of this ecosystem, but they must be built and operated responsibly. As investors, it's essential to stay informed about these trends and their potential impact on the economy. While the proposed ban in New York might seem like a negative development for companies involved in data center construction, it could also create opportunities for innovation and sustainable growth. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.